on to the panel discussion. I now have the privilege of introducing the panelists. Mr. Vikas M. Sachdeva, Chief Executive Officer at MK Investment Managers Limited. Mr. Vikas Sachdeva is CEO of MK Investment Managers Limited, a wholly owned subsidiary of MK Global Financial Services Limited. EGFSL is a leader in the financial services sector, pursuing wealth creation opportunities for investors in the Indian capital market. Mr. Vikas is an industry stalwart with over 2 decades of experience. In the course of his career, he has held several influential and senior management positions across marquee financial service organizations. He was the CEO of Edelweiss Asset Management Limited, successfully turning around the business, culminating in the acquisition of JP Morgan MF. He was the global CEO of Inam Asset Management Limited and had stints with Birla Sun Life International, AMC Limited, and ING Investment Management Limited. He has a broad range of interests across functions like sales, distribution, marketing, investment banking, product, and customer service. Mr. Vikas has been an erstwhile member of the Mutual Fund Advisory Committee, a high-powered committee appointed by SEBI to advise them on governing the MF industry, and he was also on the board of the Association of Mutual Funds of India, AMFI, heading the ETF and Indexing Committee. Currently, he is a member of the Advisory Committee of the India FinTech Forum. We also have Mr. Nilesh Gupta, who is a finance professor at IIM Nagpur. Professor Nilesh is, as I said, a professor in the finance and accounting area at IIM Nagpur. He works in the field of behavioral finance, asset pricing, corporate finance, financial markets, mutual funds, technology adoption in finance, and other disciplines and business models. Professor Nilesh has completed his BTech Electronics from Dr. APJ Abdul Kalam Technical University and then started his professional career working at Tata Consultancy Services, creating the anti-money laundering software. He got his PhD from IIM Ahmedabad and taught at IIM Tirchi for over 5 years, taking courses for the 2-year MBA program, PhD program, and working executive MBA batches. Professor Gupta has several cases, research papers, media publications, and paper presentations at international conferences to his credit. He's an active volunteer at iSpurt, the think tank credited with conceptualizing and implementing several high-impact initiatives such as the account aggregator. Mr. Somnath Mukherjee, CFA FRM, Managing Partner at Ask Wealth Advisors, is also on our panel today. Mr. Mukherjee runs the investment strategy, product advisory, and international wealth management business, as well as operations and client service at Ask Wealth Advisors. He has over 20 years of experience in wealth management, private banking, and global markets with Standard Chartered Bank across India and Singapore. Prior to this, he has worked as a senior partner at IIFL Wealth and executive director and head, investment advisory and credit. He specializes in treasury and structured products, wealth management, asset management, investment strategy. Mr. Mukherjee holds an MBA degree from IIM Calcutta and a bachelor's degree from University of Delhi. He also holds the CFA and FRM charters from CFA Institute and Global Association of Risk Professionals, respectively. The moderator for this panel is Mr. Anish Mathew, CEO, CAMS FinServ. Mr. Anish is the Chief Executive Officer of CAMS Financial Information Services. He has been associated with the account aggregator business since October 2021. In his 18 years of experience, Anish has played a significant role in shaping digital businesses, forging complex strategic partnerships, and nurturing growth investments. In his previous stint, he was co-founder of Symbol, where he played an integral role in designing the business model for the proposed digital-only asset manager. Prior to Symbol, he has also held strategic leadership positions at Cisco, Premji Invest, and Lehman Brothers.
Okay, yeah. Okay. Cool. So I know we are running late and it's a working day, so we will kind of keep it short. But the panelists will be around after the panel discussion. You could always, connect with them as well. First question to you, Vikas, since you said you shouldn't be asked the first question. So yesterday, I think it was a pretty important day for capital markets in India. Because apparently 100 million demat accounts were created, and which is a fairly big thing, because if I look back 2-3 years back, we did not have even 50 million demat accounts. So last 2 years have been tremendous for the capital markets. Also for mutual funds, where we have about 35 million unique investors now. but that still is a very small portion of our population who are accessing the financial markets. How can AA help the current trends going forward in increasing the financial market participation?
Thank you. Specifically, and then bring out the AA part of it. I think most of these investors which have come into the system, they have either been asking for information, asking for financial advice, seeking out financial advice, seeking out new avenues, or have probably stumbled upon it by reading it in some newspaper about some stock market rally or whatever. There has been no advice which has actually been coming to them versus basis their financial profile, if you will, right? So, for example, if I'm part of the 100 million capital market investors or part of the 35 million mutual fund investors, chances are that I would have sought it out. My first mutual fund investment was simply because I was in a mutual fund. I would have never heard of a mutual fund otherwise. And I think the Mutual Fund Sahi Hai campaign would have motivated a lot more people to go and ask for it. But this is just the tip of the iceberg. Now, what I think an account aggregator platform can do is, and it's just at a very, it's at a very holistic level that I'm talking about it. If financial information is available to intermediaries, basis consent, basis what have you, I think there will be a flood of customized products which will come in. It could be as simple as a robo-advisory product, or it could be as sophisticated a registered investment advisor, talking to them. Because here is a guy who will see his information now and says, okay, I didn't realize my money is lying here, this is going here, this is going there, I probably need some financial advice. Or some FIU at some stage would have realized that this is some information which can be put to better use. Maybe when he's paying off his loan, his other cash flows can be structured much more properly. I think this is going to be an inflection point for the next level of investors to come in. The early adopters have already come in, the next batch of people have already come in, but the mass adoption will now start happening. It happens everywhere, whether you talk about vaccination, whether you talk about people coming to the capital markets, it's always the early adopters and then people who follow, but the herd comes in much, much later. That whole flow will start coming in now, and I think this is going to be a very big trigger.
Somnath, you run one of the largest investment platforms in India, especially for the HNI investor base. So would really love to hear about your views on this, how it can be scaled up further.
Aggregating financial information across multiple institutions, types of products is pretty much the holy grail of wealth management. It's been tried. There are various solutions that banks globally have tried. And there isn't a single success story. There isn't a single model where information across multiple product types, platforms can be aggregated at one place and made available in a manner that is seamless. I think one of the points somebody made was a manner that is seamless. This is the first time that somebody is trying that in India. And in true Indian way, it's been done as a public stack. And that, I think, is the great use case for this. Obviously, at the top of the pyramid, which is where the firm that I work for, ASK, works, there are very obvious use cases of this. But are they the most important ones? I'm not sure. From a marginal utility perspective, these guys, they have their own private wherewithal to do the account aggregation. They can do manually. They have an army. Many of them have family offices that do exactly this. Now, this will probably hasten that, make it more seamless, all that. But the real use cases will be as you go down the pyramid. And that's where significant improvements in terms of quality of intermediation will happen. Today, intermediation, whether it's on lending, on the asset side of the bank's balance sheet or the liability side of the bank's balance sheet, is sorely dependent on access to incomplete information about a person's balance sheet. Once that is clearly available, now this still doesn't go all the way because I think still limited information on loans, but once that happens, then the quality of financial intermediation that we see will be significantly different. And I think that is the big opportunity.
Understood. And that leads me to my next question, Nilesh. So, of late, in the last, let's say, 1-2 months, we have seen a flurry of regulatory directives from RBI, right? Almost all of us out here are reading about it. On a weekly basis, we are seeing new directives about PPIs, FLDGs, etc., and the final ones which just came out last couple of days back. Obviously, a regulatory oversight is super critical for a good way of developing. But fintechs do have a way of pushing things a bit too far, forcing the regulator to step in. So, how do you think this will play out, and what would be the impact of it, especially in the unsecured digital lending, which was taking off quite a bit over the last 1 year?
I think irrespective of which financial sector regulator we are talking about, the big picture is pretty clear to me as to what they want. They want that the money, the capital, to come from a regulated entity. The regulated entity must have control over it. We can go into depths. I mean, people can go into depths on why they are doing like this, but I'll take that for now. Maybe because these regulated entities know the way of business. They have been in operations for long. And when I mean a regulated entity, I'm talking of any entities which is licensed to any of the 4 regulators. Whether RBI is the regulators are pretty clear. This is the way we want to go. And fintechs are entities which will help them streamline the value chain, cut down costs. I think with account aggregator, the major impact that you're going to see is cutting down costs. Now, by itself, that's not great, but what it does then, it allows every entity or financial service provider to offer products at smaller ticket sizes. That suddenly makes financial inclusion real. Whether we are talking about HNIs, as Somnath was saying, where they have a huge army to do it, fine. But what about level lower than HNIs? Account aggregator slashes and takes a machete to the costs of all of this. And suddenly we enter a new world where ticket size is lower, and voila, a new whole Indian economy opens up. We really have 100 billion people. Now the effects of that are transforming. I think that is the way we'll go, but I think the country will take time to recognize what a truly innovative approach it is happening.
No, quite true. I think over the last 1 year especially, we have heard quite a lot about account aggregator replicating the success of UPI. Having said that, these two follow different structures. One is a mandatory one. There is a centralized network to exchange data. But here it is a voluntary one, obviously with a nudge from the finance ministry as well as the regulators. But do you still see the evolution of the account aggregator to run in the similar trajectory?
I have been hearing forever that India is a credit-starved country. The growth of account aggregator will be a function of how credit-starved we are. Particularly I expect to see a lot of lower income groups pick up account aggregator implicitly. Because see, the beauty is this. Your vegetable vendor for 2 to 3 years has been selling and getting money via UPI. I now know how profitable he is. I can lend, I can collect. So the efficiencies are not only on the data side, they are also on the collection side and on the monitoring side. I don't know how many of you are aware, a loan of 160 rupees has been disbursed and collected via an account aggregator. 160 rupee loan for a week. If that is not transformational, I don't know what is.
Absolutely. I think, on the lending side, flow-based lending to the credit system lending is really going to be helped by the account aggregator. Similarly, Vikas, on the capital markets side, again, what we are talking about is, unlike, let's say, the HNIs that Somnath caters to, right now you don't have a mechanism to collect and monitor individuals or a family office, whatever, investment account on a regular basis and guide investment decisions accordingly. Now you are getting a 360-degree view of that particular individual's financial assets across multiple asset classes. How much will that drive the adoption to the next level of people below the HNI segment?
See, very early, when I started my career, I was given a maxim, I was given a philosophical statement which said that if somebody wants to buy a television, they look at their immediate neighbor and evaluate what television to buy. But when one wants to invest some money, you look at somebody who's better than you, who's doing much better than you. So I think this is a trickle-down effect which happens. You would want to talk to somebody who's managing his money a lot better and say, why, how are you doing it? What are you doing? That's how things start flowing. The biggest advantage right now is that there's a lot of conversation happening around financial advice, around different types of managing, investment avenues. I personally believe that this is somewhat like the telecom movement. For quite some time, telecom tariffs were coming down from 13 rupees to 5 rupees to 2 rupees to 1 rupee at one point of time, and we thought that probably this is another. But once data started becoming free, use cases started coming up. People said people will never make money. But the sheer adoption of mobile phones from an ultra HNI category to below the pyramid category has suddenly transformed everything. We just saw it happen right in front of our own eyes. 5 years ago, we would have been having a discussion in terms of how can we get down to the bottom of the pyramid in terms of telecom. And today it's there, right? Jandan accounts are there. I think there will be an inflection point. But I'm betting on the fact that people want to improve the standard of living, want to improve the quality of finances, so they will seek it out. They will talk to people who are doing it better than them or perceive to be doing better than them. And that is what is going to lead to that inflection.
No, interesting. So, final question to Somnath. Like we discussed earlier and came out in the presentation from Sumendu as well. A lot of this means the customer that we are looking at, he needs to trust the system, right? Whether it is privacy, what's the data, is the data being used in the manner which is prescribed, etc. And that is where I think the success of account aggregator will finally happen. How can AA platforms, AA ecosystem, including FIPs, FIUs, as well as the account aggregators, can really enable it? Because you keep hearing about horror stories of data leakage in the Indian system right now.
I think the simple answer is more use cases that are useful. So when there are more use cases that are too compelling and too good to miss out on, people will sign up. I am fairly sure this will go through at least one cycle of not just regulatory, but one cycle of legal challenges over some aspect or the other in courts around privacy. Something is bound to get out in the domain, which gets blown up. So this will land up in Supreme Court at some stage, and one round will happen. We've seen this with laws in this country forever, and this will likely follow the same method. But really the big app is the use case. And that is really dependent on FIUs. The better the use case is, more compelling they are, people will sign up. And partly, I think, most societies, 9, 10 at night, so most societies kind of develop when the elites adopt something, and then it sort of boils down to the next level and the next level, right? In this case, once the top end of the population, the top 5%, the top 10% adopt this a lot more, it will automatically give societal confidence down the chain. So I think both of them need to happen simultaneously.
If I can just add to that, it's a very interesting thing I read recently, that while brands do have their importance in terms of trust, etc., but a lot of it is now getting driven by approval ratings. So this case which I read recently, I don't know how many of you remember that there was a problem with Cadbury's in terms of the worm infestation thing which happened 5-6 years ago. So they had to actually bring in Amitabh Bachchan as a brand ambassador. This was at a point of time when social media was not so prevalent, right? So he was brought in, he took you around tour of the company, showed you what was happening, and that actually led to a lot of alleviation of, and they got the trust back. Quite recently, there was something which happened with Maggie. Okay, same controversy, I mean, similar controversy. But I think a lot of people came back to Maggie. It was always the brand, and the ad campaign which they ran. But it was on social media when people started giving ratings, thumbs up, likes, etc., saying that this is safe. You had YouTube influencers coming in. So there was no one brand like Amitabh Bachchan came in. It was a host of, underlying convictions coming in from people like you and me, which actually drove the entire trust thing back. So I'm thinking it's a very, while brand still counts for a lot, you would go to a large brand, but I'm saying that generation after generation now is realizing that it's not just brand. You need peer rating also, which will help you. And I think use case is what you're talking about, peer ratings. This is what is going to really drive adoption.
Oh, fantastic. Thanks a lot, gentlemen. Unfortunately, due to lack of time, we cannot take questions right now, but the panel will be out with you. So feel free to check with them about your questions and doubts. Thank you.
Thank you so much, gentlemen, for an insightful discussion. I would now like to call upon Mr. Anuj Kumar once again to the dais, this time to felicitate our speakers and panelists. I would request all the panelists to come back on the stage, please, and Mr. Venkatramu to join them as well.
Really appreciate your time. Thank you very much. Thanks a lot.